What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. We are at almost 6,000 subscribers, and I have 3 dividend stocks to buy that are under $10. I've been buying the dip and capitalizing on these dividend stocks, and these are ones that had consistent dividend increases. They're very cheap, and these are things when the pandemic hit. These are ones that I'm capitalizing on. They're way down and they're cheap. And I'm going to reveal these to you. But again, if you are new to this channel, hit that subscription, smash that like button. These are free to you guys. I don't charge anyone. I don't do anything. All I ask you to do is hit that notification bell, smash that like button, and enjoy my channel. Let's check these stocks out right now. My first dividend stock is SACH Capital Corp. I have been capitalizing on the dip with this one. It is sitting at $5.48. And usually I'm very cautious with dividend stocks or things that are very close to penny stocks. But this is one I've been buying, capitalizing on the dip. And I absolutely love this one. I had it on M1 Finance, sold it. I'm just going to buy it individually and throw it in my E-Trade dividend portfolio. It has an 8.76% dividend yield. The year range is 361 to 568. I like this one. I'm going to show you what these guys are about real quick. These guys are a Connecticut-based real estate finance company that specializes in originating, servicing, and managing a portfolio of the first mortgage loans. So they have strategic lending. At SACH Capital, they seek to maximize their risk-adjusted returns and preserve and protect capital through their discipline and credit-based approach. Leadership, our leader has successfully originated and serviced our portfolio of short-term real estate mortgage loans, generating attractive annual returns under varying economic and real estate market conditions. So their mission statement was created to serve the financing needs of real estate owners and investors. We match the needs of our borrowers with capital from our investors and shareholders who entrust us to make prudent investment decisions. So here's the thing. I'm very cautious with mortgage-backed real estate investment trusts. I have emphasized this numerous times. The symbol NLY and agnc, I'm very cautious with. I want to see an increase in revenue before I even jump the gun and start buying these dividend stocks. And I want to see dividend increases. At least I can understand during a pandemic, okay, you take a big nosedive, but are you increasing your dividend after you took the big cut? That's what I'm being very cautious with a lot of these ones. And this one I'm capitalizing on. And I'm going to be long in this one. I think I'm going to try to get at least 100 shares of these, or get to that point where I get 100 shares and just keep on reinvesting the dividends. I got to show you the revenue on these guys. So again, this is in millions of US dollars. This is 1, 2, 4, 6, 11, 12, 18. Significant increases even during the pandemic. So these guys are generating cash. These guys are increasing their dividend, which I'm showing you. And this is something that is less than $10 that I would be crazy not to buy. And I'm going to be buying it. I'm telling you right now, I am buying this. And again, none of this is financial advice. It's for entertainment purposes only. I have a disclaimer in the description of all of my videos. But gosh, I absolutely love this. So let me show you the dividend increases. So if you look at this, they have been increasing their dividends over time from 10 cents, 11 cents, 12, 17, then it took a nosedive, and it's back at 12. But they're increasing their revenue during a pandemic. They're consistent at 12. They haven't decreased their dividend. Their PE ratio, and again, a real estate investment trust, PE ratios, if it's really low, that's when you're like, okay, red flags, red flags, red flags. Nobody wants them. They're decreasing their price. Something's not right. But these guys are slowly increasing their price. They're slowly increasing their revenue, and their dividend yield is 9.27%. That's why I'm capitalizing on the dip. I mean, the pandemic, the real estate sector was hit hard, okay, very hard, and I capitalized on that. And, some of the bank stocks that I had, I sold them, threw them into my real estate investment trust, and I'm generating a ton of cash and dividend income from that. So this is my first one. Symbol SACH. Let's jump to the next dividend stock. This next one is MFA Financial. It's sitting at $4.58. It has a dividend yield at 8.74%. Now, it's kind of a low PE ratio, but we need to look a little bit more into them, see what they're about. The year range is $2.63 to $4.90. The market cap is 2.03 billion US dollars. who are these guys? We need to look into see who the heck they are before, you start looking at this and looking at the nitty and gritty. You need to understand what they're about before you start making decisions. I always tell you guys that. Look into these dividend stocks, look into their history. Is their revenue increasing? Are they in demand? Why should you buy it? You should ask yourself, why am I buying this? What's in this for me? Let's check these guys out. Okay, so they're a real estate investment trust, primarily engaged in the business of investing on a leverage basis in residential mortgage assets, including residential mortgage-backed securities and residential whole loans. Okay, so the most important thing, if these guys are good, again, like I say, with NLY and agnc, how is their revenue doing? Let's check them out. So these guys are kind of stagnant, but at one point, they have been increasing their revenue, which makes this attractive. So they're a little stagnant here, but I like this increase in revenue. And then they took a little bit of a dump right here. But again, this is not financial advice. I like the way that this dip happened. I like the dividends. I'm going to show you just because, right here, it's going up. So they're doing something right in the past few years. You can play the pandemic card, but I'm going to show you their dividend history. So here's the thing. They were at 22 cents, then 20, 20 cents. But look, they went to 7 cents. They're slowly increasing their dividend, which is good. Now, I like the previous one. I like SACH, SACH. Again, this symbol is MFA, but I like SACH better than this one. But this one's still one that were the dips there, and this is why I bought a few shares of them. I don't know if I'm going to get to 100. I like SACH better, but their dividend yield is attractive, and their dividends are increasing, and the dip's there. So this is an opportunity for you guys as day traders. Hey, some people like day trading. There's a dip there, and they are increasing their dividend. So, a lot of you guys that brought Prospect Capital or agnc when the dip happened, kudos to you guys. There's nothing wrong with that. I just don't like the decrease in price per share and the decrease in dividends over time. But the dip is here. This is one that I'm going to capitalize on. I like it. It's cheap. It's very cheap, and it's slowly starting to increase its dividend. Let me jump to the next one, and I think I'll give you guys a bonus stock too. So let's jump to the last dividend stock. This is one I absolutely bought today, and I'm capitalizing on the dip. Invesco Mortgage Capital. This is a pretty popular one amongst dividend investors, and it has 11.43% dividend yield. The PE ratio is very low, but these guys are pretty good out there. And normally, at one point, they were $18.23. They're sitting at $3.15 right now, so it's going to take a while to recover. And I'm going to show you what they're about real quick, and I'll show you their revenue and dividend history. So I'm going to refer to finance.yahoo.com. They gave a very basic introduction to IVR. I think this is the best one that I've seen so far. Straight to the point. It's an attractively priced mortgage rate that has a 10.8% dividend yield and covered by its earnings. This price is $3.33. It actually is fluctuating per dividend yield, but I have to show you how much revenue they're generating and their dividend history, which makes these guys very attractive. Mortgage-backed real estate investment trust that was doing well, and all of a sudden, boom, took a hit, significant hit. Look at this, 2014. Okay, so 2015, a little bit down, but 2016, 2017, 2018, 2019, they really improved their business model, and their revenue was increasing, which makes it very attractive. Then all of a sudden, 2020 hits, pandemic, boom, down to 280. Now, this is in millions of US dollars. So I capitalized on the dip. I'm going to try to at least get 100, 200 shares of these guys because it's so cheap. And I'm going to show you its dividend history. Look at these guys. They took a huge hit, 45 cents. They were down. They hit 50 cents because their revenue and everything was going well. Then boom, the pandemic happened, 2 cents. They're slowly increasing, 5, 8, 9 cents. The dividend yield, I guess, per NASDAQ is 11.54%. NASDAQ is pretty accurate with that. Their PE ratio is 4.55. right around that. And again, they took a huge hit, so investors are probably like, ugh, you know. So that's one thing with the confidence of that. But once they start generating more revenue, there's probably going to be more confidence in these guys. But my gosh, $3.15 out of all the three, this is the one that I'm putting a lot of money into, and I have a lot of confidence in. I like SACM Capital Group. IVR is a symbol for this one. SACM is probably number 2, SACH, and MFA is probably number 3 on my list. Now, this is sitting at 9 cents and it's slowly coming back up. So the dip was there. I mean, the price was right around $15 to $18 when I last checked before the nosedive of the pandemic. So wow, this is capitalization time, and they're increasing their revenue, which make them very attractive. I'm going to show you a bonus stock real quick that a lot of investors like. Here's another one that a lot of people love, and it's sitting at $11.08. I actually added these guys in my M1 Finance dividend portfolio because the dip is there. It has a 9.07% dividend yield. NRZ is a symbol. It's very popular. New Residential Investment Corp. It's another one with the mortgage-backed real estate investment trust, and its revenue it's slowly improving, which I'll show you, and then its dividends are so attractive right now, and the dip is there. So how do you say no to that? I'm just going to show you real quick some of the trends. Look at this dip, huge dip. Then March, increase. There's an increase. They're coming back, making a comeback. June, they're starting to make a comeback. So I'm just giving you a heads up. These guys are slowly starting to make a comeback. I'll show you their history on macro trends real quick. Now look at these guys taking a huge jump and then taking a huge nosedive. This is in millions of US dollars. 346, 645, 1,194, 944, big deal. 2,000, 192, 2,151, 547. Oh, that's a big dip because of the pandemic card. Now let me show you their dividend history. Here's one thing that's attractive. They have been increasing their dividends over time. They hit 50 cents. Pandemic hit. Look at that huge nosedive. 5 cents, 10, 15, 20, going up to 25. Its dividend yield is 7.28%. The PE ratio is a little bit low. And again, FFO is the most important thing, but these guys are starting to generate revenue again. And they're making a comeback. So very attractive. These are 3 dividend stocks that I have, and the bonus stock, NRZ. 2 of them I'm buying like crazy. MFA, I'm going to buy a little bit and see what happens. Maybe sell it and throw it into IVR. But SACM Capital Group and IVR are my 2 go-to ones right now where I'm buying the dip. NRZ is another one that I added to my M1 Finance dividend portfolio. So if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one. And make sure you smash that like button. And again, these videos are free for you guys. I'm going to post another video tomorrow. And then I'm going to be working for the past 3 days. I may try to squeeze in one. Don't quote me on that, Saturday, Sunday, and Monday. But I may try to do one just on one dividend stock or so. But again, keep on hitting that notification bell. Some of you guys are starting to do that. You're like, wow, I didn't realize about the stock. That's what I'm doing. You got to hit that notification bell. So I'd like to thank you guys. We are almost at 6,000 subscribers. And I wouldn't be doing these videos if it wasn't for you guys. So I'm very grateful. I'm very humbled by you guys being active on this channel, being very supportive. I know it's crazy with me and graduate school and everything, but this is for you guys. You guys take care and have a good